to another Thursday night stock charts live. Can you believe it's another Thursday? Here we are. We just got done with Sunday night stock charts live, and like that, Thursday night. Welcome. It's great to have you here. I'm going to start it off. Smash that like button. Please subscribe, become a member, all that good stuff. What we're going to talk about tonight is the market, especially for those that are beginners out there. You know, you go around on YouTube when you have a market under pressure. Nobody wants to talk about what a beginner should do. They always want to talk about what a beginner should do when it's a bull market, when everybody's happy, giddy. They don't teach you how to trade a somewhat bearish market. I'm not going to say a bear market, but we're going to talk about how to trade the market you're given, not the market that you want. What else are we going to talk about? We're going to talk about earnings season. Earnings season began for us today. Today. It's Christmas in January. We love earnings season. We'll talk to you about a trade that we put on. That trade will hopefully expire worthless tomorrow. We're going to talk about other opportunities in this market that are beginning to emerge, and they are very, very attractive. So you're going to hear a lot of people out there. The market's going to hell in a handbasket. It probably is. A lot of sectors probably are. But keep in mind, there are a lot of sectors out there that have already been beaten to death. And there are opportunities out there. There are also sectors that do well right now in a rising interest rate environment. Not that yields went up at all today, but when yields go up, they do well. So we're going to talk about the economic data that was released. We're going to talk about CPI and how it relates to the recession that never ended. And I would even call it a depression. That is the 2008 financial crisis and how it never, ever ended. And I'll show you the chart to prove it. We'll talk about gold. We'll talk about the Fed's balance sheet. And of course, we'll talk about the weekly charts and how the indexes are poised to close. And then, of course, we'll segue on over and into some chart requests from members. And we have time. I'll take some requests from the audience. Before I forget, we want to be cordial to our visitors. And let's say hello to Luis. Luis, hola Roberto, hola Luis. ¿Cómo está, man? William, good, my friend. How you doing? Larry, should we ban lawmakers and their spouses from trading stocks? I love the idea, and I think there's something happening in Congress, and yeah, both sides that may sign on to this. You would think that it would be a no-brainer, but nope, it's not. Not in our Washington, D.C. Hey, Paul, welcome. Yeah, it's crazy, man. Totally crazy. Yodi, I'm hearing that China is shutting down their ports again. Yes, I heard the same thing. Paul M, beginner, that's me. All right, so we're going to talk about it. We're going to walk our way through this market. Now, when I talk about the beginning investor, you know, if you're an investor, you have to segment out trader versus investor. If you're an investor with a long-term time horizon, dollar cost average. Take the same amount every single week or month, deposit into your brokerage account, dollar cost average over the course of your investment time horizon. If you're a trader, if you're looking to see, let me rephrase. If you're looking to trade what worked in the back half of 2021, thinking it's going to work this time around, the beginning of this year, Stop. Different market. It's okay. We don't have to keep trading the neos and the this and the that's. It's okay. There's an entirely different market out there to trade. We're going to talk about it. So let's first talk about Eric. Hey again, Bob. Hey, Eric. Can we take a look at SPSIBI? Is that a real symbol? SPSIBI? Underlying LABU? Oh, it's the S&P. I see. S&P Biotech Select. Yeah, we can take a look at that. That would be interesting. Okay, yeah. Remind me, As a matter of fact, let me write it down. Okay. All right. So let's talk about the market that we have. As options traders here at the Contrarian Trader, we love selling premium. The market is down for 2022. We are up. So something's working. Now, the earnings season for us begins tomorrow. We opened up a trade today in BlackRock. We had to do it today because they report tomorrow morning, and that trade is a Strangle. We sold, not bought. We did not buy these options. Why don't we want to buy the options? Because the options are expensive. We want to sell the options. We want to generate cash flow. We want to be the casino and not the gambler. So we sold to open the 935 call contracts. Simultaneously, we sold the 810 put contracts, same number of contracts, expiring worthless, hopefully worthless, ideally worthless, tomorrow. That's what we want. We want them to expire worthless. We don't want Blackstone or BlackRock to move 1 penny tomorrow. The less it moves, the more money we make, because what we'll experience is IV crush, implied volatility crush. What is that? It means that the options as we closed out the day today became very expensive. Why does that happen before an earnings announcement? It's because you have speculators that are out there. What are they doing? They're buying the options. They're betting on a big move, one direction or the other. I'll take the opposite side of that bet when I'm going twice the anticipated market makers move beyond where the shares closed. So the shares closed at 867.58 on the day. The anticipated market makers move is $30, $31 per share. Tomorrow, we went out roughly twice that in terms of distance beyond where we closed. That way we build in a buffer, right? We don't want to gamble here. All we want to do is generate cash flow off of an inefficient market from the perspective of premium sellers. So that's what we did with BlackRock. Will we make money? We don't know yet, but in all probability, we will. The probabilities are in our favor. So that is one way we are trading this market. I have an explainer video on what a strangle is. That's what this trade is here. It's called a strangle. We always have strangles on, always generating cash flow, whether it be on earnings, whether it be just simply month over month, what you call theta trade. Theta is the Greek term for time decay. We take advantage of that on expensive options. So video below, view it at your leisure. And that is how we are beating the market right now. One of the ways. So what other opportunities are revealing themselves in this market? Well, I ran a scan today, and I was pleased to see that Netflix, believe it or not, closed out the day today. Now, don't get me wrong, this is going lower. But Netflix closed out the day today with RSI 18.78. So in this market environment where you have we're going to come back to this fund in a little while. We'll go to the ARKG, where you have the ARK fund, the ARK Genomics fund, getting hammered. And it is probably going to head lower. Stokes rolling over here, but becoming interesting. I'll say that. Where you have this fund, which has more downside to go. You have names like Netflix and other names that are out there that are becoming extreme oversold stocks. They're entering an unsustainable downtrend. What does that mean? It means that, hey, if you adopted the strategy that we had moving into 2022 of keeping a very, very big cash position, you're going to be able to take advantage of Netflix with RSI down below 20. That's attractive. Would I go buying Netflix tomorrow morning? No, absolutely not. Why? It's because weak stocks tend to get weaker, and we're probably going to come down, and we're going to retest historical support levels. Where might they be? We don't know definitely yet, but we can judge using probabilities where the shares may bounce. You have one support level here, last seen back in the summer at around $500 a share. If that fails, we're coming down to 585 to 485 to 578 per share on Netflix. And we will be involved. We will be looking to buy Netflix for a counter trend rally. So we're not going to go in tomorrow morning like amateurs and say, wow, Netflix has got an RSI down below 20. I got to buy it because it can't go down anymore. That's stinking thinking. You don't want to think that way. You will go broke. You need to use your charts. You need to use technical analysis. I have a 5-part video tutorial below. It's free. Check it out. Opt in. Get it. 5 free videos. My top 5 favorite candlestick patterns. I don't get paid a dime off of it. So we need to watch for bottoming action at historical support levels. Where will they be? We don't know yet. We're not that smart. The market's going to tell us. Members, of course, will be sending out an alert when we get involved. And I can't imagine that we're not going to be involved with Netflix. Let's talk economic data. Why is the market doing what it is doing? Well, it's not necessarily what the economic data is coming out. It's what they expect to come out. And you have a lot of banks out there. It looks like Goldman, JP Morgan, they have net short positions on. They are really jawboning the market down now, not bidding it up. Why? Because they want to short the market. They want to make money. They're liquid now. So they're good. They're good to let the market drop. How are they driving the market lower? Simple. 4 interest rate hikes in 2022. Oh no, JP Morgan says, no, you're wrong. 5 interest rate hikes in 2022. Folks, we're going to be lucky to get 2. 2. If we get 1, I'll be shocked. If we get 2, it'll be amazing. I'll be beside myself. Why? It's because this market is broken. This economy, I should say, is broken. It's broken. It has been broken since 2008. Before I go to the chart and prove it to you, let's take a look at the economic data. Tuesday, NFIB Small Business Index, not bad. Maybe the Small Business Index is going to do well because you have all of these companies that are out there that are knocking off their employees. The Supreme Court comes out today and says, okay, it's illegal for OSHA to do what they're doing. It's not OSHA, the federal government, to demand that large corporations mandate their employees. But these corporations, what they're going to do, they're going to continue to lay off employees. Who benefits? Who benefits are the employers that don't have the mandates. They're going to take the cream of the crop. People that work for these companies are going to know their value, and they're going to go to the smaller companies, and they're going to get picked up on the cheap, and they're going to make a wise business decision. So for those large Fortune 500 companies that still want to mandate your employees get vaccinated and prove it, you're getting a wake-up call from Washington, D.C. And if you choose to go that route, well, then you're going to lose a lot of high-quality employees, and the small cap companies are going to do well. That's why you're seeing one of my guesses as to why you're seeing the NFIB Small Business Index do quite well. It beat expectations. What else could happen this week? CPI came out. Very hot year over year. Very hot. At the core, extremely hot. We got initial jobless claims. They popped up higher today. The PPI came in worse than expected. Interesting. I'm just picking that up now. I think Franklin posted something in the blog earlier. Franklin. Speaking of Franklin. Even Bob, love those strings. Yeah, man. When God created an angel on earth, he made it in the form of a strangle. So yeah, they're doing well. Okay. Do we have any? Oh, tomorrow we have retail sales that comes out. You missed sentiment survey. A lot of economic data left to go in the week, folks. So buckle up. All right. So I mentioned earlier that the correction, the crash, the great financial crisis of 2008 never ended. It never ended. How do we know that? All you need to do is take a look at this chart here. In Candlestick, this is the CPI, the Consumer Price Index, which is ripping through the ceiling. Now, you can go back over the course of, I don't know how far back this goes. All right, it's a bit much. Let's go back 25 years. Okay. All right. So here you can see that when the CPI was declining, it's because you had yields which were rising, right? But then over here, you had the great financial crisis. Let's overlay the S&P 500. And we'll make that blue. Okay, so here's the S&P 500, which bottomed out in February of 2009. The problem is this, is that while this is skewing my chart now, let me get rid of it. While inflation has jockeyed up, moved higher and higher. In years past, yields would have moved up higher with inflation. CPI is here in gray, in dotted gray line. I'm sorry, the 10-year yield. Sorry, 10-year yield in dotted gray line, CPI in Candlestick. So CPI rises, so do yields, right? They go up. That's historic, right? The problem is this, is that you had the great financial crisis, and while yields have steadily gone down, you've had the CPI, which has gone up higher. Why? It's because the banking system has never gotten corrected. You have zombie companies out there that, were it not for artificially low yields and in real terms negative yields, they would be out of business tomorrow. So they can't allow for the normalization of the 10-year yield to fight this inflation as they did prior to the great financial crisis. This divergence, CPI going one way and the 10-year yield going the other way, is a broken system. Have no doubt about it. It's a broken system. The problem is now trying to right this ship. How do you now get CPI and bring it back down to a normal trajectory without absolutely collapsing the stock market? Because remember, the stock market is the economy. For the longest time, people always wanted to say the stock market's not the economy. It is the economy. When it comes down to politics and politicians, the stock market is the economy because everybody's got a 401k that's working and they're in the stock market. So to them, that's reality. So what to do from here, getting back, if you're a beginning investor, what to do from here? I don't know. Do you invest in gold? Do you invest in the S&P 500? I don't know. S&P 500 is down 2.25% on the year alone. The Trip Qs are down 5%. Those are the mega caps. Your ARK-G fund, RK fund, is down 15.5% on the month alone. This is catastrophic. I see opportunity here. It's coming, not quite yet, but it's coming. As long as you keep your capital reserves, don't go buying this market now. So where is there opportunity? Gold. Gold, man. Gold, while the S&P 500 is down 2.25%, gold is down just over 1/3%, and it was lower. It broke out last month, did a retest of the breakout point this month. It is now moving up higher. I'm predicting that it's going to close positive on the month. Watch out for gold. We are very heavily levered towards the gold mining stocks. We love it. We love the gold mining stocks. Selling premium, generating cash flow. That's where you should be looking, not here. Not the ARK-K funds, the ARK-G funds, these highly volatile funds that are in a full-fledged bear market. Abel, how you doing? Being vaccinated is not just about oneself. It's also about protecting the vulnerable in society. I disagree with you. Refusing the vaccination is an act of selfishness? How is that? Do the vaccinated not transmit COVID? They do. It's a fact. So to say that, I respectfully disagree with you. Andy, buy puts. You got to be careful with buying puts. It depends upon what you're looking to buy. And there's a way to hedge that position. You can get short, but also hedge that position. Bob, sell everything then or take UVXY for life. Was that the volatility? No, I don't think you need to sell everything. UVXY. UVXY. Yeah, it's the VIX. Yeah. Falcon. Hey, brother. Louis, what happens to crypto through all this, Bob? That's a great question. So crypto, I'm going to save this. I want to show you another chart, very similar to this one. And I did this analysis a while ago, several months ago, where I was asked, what does Bitcoin correlate to? And I thought it was a great question because I didn't know. And so I spent, because this is what I do, I spent the weekend researching it, and I presented it on a Sunday night. And where is it? CPI. Oh, Bitcoin. Here it is. Bitcoin monthly versus CPI. Now, I'm not a believer that that Bitcoin is done here. I'm a big follower of Peter Schiff, but him and I disagree here. I think that Bitcoin is probably going to go up higher, longer term. Shorter term, because people are speculating that the Federal Reserve is going to raise rates, that what that's going to do is going to keep a lid on Bitcoin, because Bitcoin, which is in Candlestick, and the 10-year yield, which is in gray, they generally trade inversely of one another. So you're seeing Bitcoin come in as the 10-year yield rallies. Now, when you take a look at the CPI over here now, I've changed this chart up to CPI. You could see that the CPI and Bitcoin trade in tandem. They trade together. So while in the short term, you're seeing Bitcoin ignore the run up on the CPI, because what people think is going to happen here is that the Fed's going to taper, and taper fights inflation. No, it doesn't. It doesn't fight inflation. When people tell you that, here's my analogy. You have an arsonist that set fire to a house by taking 2 gallons of gasoline and throwing it on the house, setting a match to it. Then you have the fire department, which comes, and rather than turn on the hoses, it stands there with a spray can of gasoline and continually adds more gasoline to the fire to keep it burning. That's not putting the fire out. That's just having the fire burn with a little less accelerant, but it's still going to burn. And that burn is the equivalent of inflation. So I'm going to show you in a moment how that plays out on the Fed's balance sheet. So until such time as everybody wakes up and says, you know what, Jesus, let's do the math here. Let's say JP Morgan's right. You have 5 interest rate hikes in 2022. What does that get the 10-year yield up to? 1.82. Let's say it goes up to 3%, 10-year yield at the end of 2022. Let's say that happens. Inflation is in double digits. So year over year, even if you invest in a 10-year bond and get paid an increased yield, adjusted for inflation, the return is still negative. That's the real yield. That will not fight inflation. It's a joke. It's BS. So if you're wondering why Bitcoin is eventually, they're going to wake up and they're going to say, okay, this is all a scam. They can raise rates, but you're still not fighting inflation. And if you're wondering why gold is rallying off the lows, why the S&P and Qs roll over, look no further than this. This is the Federal Reserve's balance sheet. Here, 1-year view. We're close to all-time highs. This is as of yesterday, folks. As of yesterday. So to think that they are fighting inflation right now is it's laughable. All they're doing is throwing less gasoline on the fire. The fires of inflation are ripping right now. And the Federal Reserve is doing nothing but making it worse. I don't make this up. This is their own data. Tom Lou, any trade idea on LABU? Yeah, I like it, but I think it's going down to the teens. Not yet. If you end up in the hospital and you were asking hard medical workers to work even harder, what are we talking about tonight, guys? My whole family. I had COVID too. All right, so and it was like a mild case of the flu. I get other people have comorbidities, and they get it worse. But I'm not buying this. The hospitals are not overflowing. That's ridiculous. All right. Bob, the big daddy of Bitcoin, MST. Oh, yeah. I don't want to. I'm not going to play earnings on that company. I really worry about that company. Abel, good man. Smash the like button for Bob. Thank you, Abel. I just hope Bob likes me, and I don't think he does. Oh, stop! Of course I do. Well, stop. I'm not. I don't hold grudges, man. We can have differing opinions. I'm not a left winger. I'm not looking to cancel people. We can have a debate. Debates are good. Whatever happened to having a good debate? Maybe I'm wrong. What if I don't listen to you and I walk around and I keep spewing out garbage all the time? I don't want to do that. If I'm wrong, I want somebody to point it out to me and say, hey, listen, no, you're wrong here. Oh, really? I'm wrong? Okay, thank you. And I'll correct it. I'm very open-minded. There was a time in this country where you could be, it is ridiculous, yeah. You could have an honest debate, but you get canceled. I mean, this video is probably going to get canceled, guaranteed. Let's stick with the topic of stocks. Yes, Falcon. Agree. Yes, Franklin. Fed cannot fight inflation. It's the old Roman Empire. Unfortunately, yeah. Yeah. Yeah, and it's happened time and ago. Again, I think it was the Mesopotamians, the Romans. Yeah, the Romans are the most classic case of it. Okay. All right, let's talk about money. Let's not worry about um, this this ridiculous cultural divide that we live in. It's disgusting. Anyway, so this is the picture, folks. Inflation's here. It's not going anywhere. You know, I'm not going to be a bit surprised once people start getting back to work to see inflation come in a little bit organically. Once the free market gets involved, once the free market is allowed to do what it does best. But as it stands right now, they've really let the genie out of the bottle at the Federal Reserve, and to do what needs to get done, circa 1976 to 1982 under Paul Volcker. I mean, you're talking about interest rates that, if they were to normalize and to fight inflation, you're talking about a 10-year yield. I mean, literally, bare minimum 8%, 10% to fight inflation. It's scary. And believe me, they want you and I to fight over these topics. They want it. They want it. Don't give it to them. This is the big problem that's out there. If you're wondering, why do we have the problems that we do in this country? Why do we have it? You got to wonder who the hell financed half the garbage that we have. Look no further than this balance sheet. They did. The Federal Reserve did it. It's disgusting. The culture wars have hurt America. We are in agreement. Yeah, exactly right. We'll get back to the markets. They want you and I to fight. Trust me when I tell you, they want you and I to fight because they don't want you watching this. They don't want us talking about this. It's disgusting. Okay. What's working right now, especially for new investors out there? What's working? Consumer staples, dividend yielding stocks. Kraft Heinz. Look at this. This is a weekly chart yielding 4.25%. Breaking out. S&P 500 is down on the month. Kraft Heinz is up nearly 5%, plus it's paying you a divvy. There is a market out there that can do well and will do well. You just got to look for it, and don't look for last year's winners to be the winners of this year. It's not going to happen. It's a new market. So I've said this earlier. I'm going to repeat it again. Trade the market that you got, not the market that you want. This is not going to work. The ARK fund is down 50.5% effective today's close since February of last year. Now, I think that there's value that's to be had here as a trade pretty soon, because when you take a look at a daily chart of the ARK fund, I could pretty much bet you a wooden nickel that RSI is going to go sub 20. And I will be in there buying it up and looking for a counter trend rally. Will I turn it into an investment? I highly doubt it. We're going to look to trade it, get in, get out, move to the sidelines, and then we watch, because you're going to have to take a look, not at a daily chart of the ARK fund or of DocuSign, these high flyers. The daily charts will get you burned because this is going lower. You need to take a look at your monthly charts. It's going to be your monthly charts that tell you, okay, we've stopped going down. We're now beginning to consolidate. My moving averages have stopped going down like this. They're now going like this, and now they're beginning to hook up like this. That's where you want to start investing. So be careful. Trade the market that you got, not the market that you want. When you take a look at other areas that are doing really, really well, you wouldn't think it, but copper, basic materials. Copper is poised for a major breakout. Copper is up 3% on the week, and on the month, it's up 1.5%, and it's going up higher. So these are just pure play examples of areas where you could be putting money together, invest here, the XLP, look at this, yielding 2.25%. You have, it's down on the week, but not as bad as the S&P 500. And on the month, it's doing far better than the S&P 500. Plus, it's paying you a yield. Now, I don't particularly like this, not my style, but I'm illustrating a point. You can make money in certain areas of the market, whereas where you can't buy is this. Consumer discretionaries, down more than the S&P 500, down nearly 3.5% on the month, and probably going a lot lower. Agreed. Copper King. Yeah, it's looking really good. Yeah. Falcon, Bob, are CHPT and Plug oversold? We'll take a look at them. CHPT, Plug. Okay. All right. Yields. Weekly chart. This is where we go review the weekly charts for those that are just joining in. Weekly charts of the 10-year Treasury yield. Believe it or not, yields are down. But wait a minute. You can't make this up. Didn't the Federal Reserve come out and say that they're going to be fighting inflation? Right? So why are yields declining? Why are they down on the week? You can't make this stuff up, folks. Let's go to a daily chart. It looks like they may want to go lower. Amazing. The TLT, 20-year bond ETF weekly chart, it is actually up on the week. Money moving into the 20-year Treasury bond. Daily chart. Strong day at resistance. This is probably going to roll over. Volume light. Tips. Treasury inflation protected securities up on the week, bouncing off of support. I hate the Stokes. Stokes trading down below 50. Rallies tend to fade. What happened on the week so far? The rally is fading. Pay attention to these Stokes, folks. If you're looking, especially for you new traders out there, if you're looking at a stock, you only need a couple of momentum indicators. That's it. You need volume, which is not a momentum indicator, but you need volume, you need price, you need RSI, you need Stokes. That's it. Everything else you can take off. I use a slow Stokes. And when you see your stochastics trading down below 50, you don't want to buy anything. You want them to bottom out, hook back up. So tips I'm not liking on the week daily chart. Stokes rolling over. Volume is about average. Interesting setup. I don't know if this holds. I really don't know. I'm torn on it. I think these Stokes may just roll over, taking price down along with it. The US dollar really hammered on the week. I mentioned this last week. Actually, on Sunday night, I mentioned this. That one day makes a big difference when you're looking at the charts on a Thursday night. I haven't said that at all. One trading day left to go in the week. A lot can happen here because this time last week, the US dollar was breaking out above the upper band of resistance, and gold was tanking. The gold mining stocks were tanking too. Fast forward to Friday, it sold off hard. I said going into the new trading week, I bet you this is going to break. Sure enough, it's broken. The dollar's in a lot of trouble right now. Daily chart. The daily chart, it bounced off of support. It's oversold relative to its third standard deviation Bollinger Band. We may pop here. I just don't think it lasts. The VIX, weekly chart, up 8.25%, spinning top formation. This can go either direction. Stokes are rising, bullish. Daily chart. Oof. This is a very bullish chart. RSI above 50. Stochastics are rising with higher lows. And we broke out today. We have a lot of resistance at 21. A close above 21 would be a harbinger of bad news for Monday morning. So let's keep an eye on the VIX tomorrow afternoon. The Dow Transports. This is actually a bullish chart, folks. And you may be saying, wait a minute, what are you talking about? Psst, psst. What are you talking about, dude? It's down. Yeah, it's all down weeks are not made alike. So the Dow Transports broke out here the week of December the 27th, right? So we got to follow through last week, but it didn't hold. It failed to hold. This week, we broke to new weekly lower lows, but what did we do? We retested what was resistance back here, acted as support this week. So that's technically kind of bullish. Now, where it does not become bullish, where it stops being bullish, is if we close back down in this prior trading range. If this support level in blue fails to hold, the transports are in a ton of trouble. But right now, we got to trade the market that we have, and it looks as though the transports are catching a bid, and volume is probably going to roll in slightly below average. Watch out for these Stokes rolling over. They may hook up, create a double bottom setup at the 50 mark. That would be very, very bullish. So keep an eye on your weekly stochastics on the transports. I will be, because we want to ask ourselves the question, do we form a W formation and break out, or do we continue down? If we continue down, the transports are in a ton of trouble, and therefore the rest of the market as well. Daily chart. Now, while the rest of the market was pretty much down on the day, the transports eked out a gain. They were up just shy of a 0.25 percentage point. The problem is that they were higher, a lot higher on the session, and they faded. Not so oddly enough, what are your Stokes doing? They're declining down below 50. Rallies tend to fade. So what's the lesson learned here? The lesson learned is, if you're watching CNBC or Fox Business News and you have some slick-back salesman that is on the TV, pre-market, jawboning the market up higher, don't listen to them. Don't listen to them. Don't watch the futures action. If you got bright green futures, you feel like you're going to have FOMO, ignore it. You got to get that discipline of ignoring the impulse to go in and buy in the morning. Because had you bought this morning, the transports, while they still closed up, you would still be underwater on the trade. So be careful. Don't let the futures lure you in. Those bright green futures, they can look alluring. The Dow Jones Industrial Average, weekly chart. Not a horrible week, down 1/3 of a percentage point. What I do want to point out is this, is that your momentum indicators, they're sending you signals. But those signals are negatable, meaning it doesn't have to happen. But the question is, how do you know that a bearish signal is no longer a bearish signal? It's pretty easy. Right now, we're rolling over, putting in lower highs and lower lows on a weekly time frame, Dow Jones Industrial Average. That's bearish. That's not good. Now, what if buyers step in and say, okay, you know what? Markets, I like the Dow Jones. It's going to do well in this environment, rising interest rate environment. We're going to bid the Dow Jones. Well, if you have RSI and Stokes, which break back out above this resistance level in blue, well, then it's negated. Safe to go back in the water. Volume is going to roll in lighter than last week, but about average on the week. Daily chart. Bearish reversal bar on the session. Stokes are weak, and they're going to get weaker. These are going to open up down below 50 tomorrow. So again, folks, don't go chasing a morning rally. They want to get you excited. They want to take parking space up in your head. Don't let that be you. Ignore it. Look what would have happened today. You chase the rally in the morning. By the end of business, you're underwater. That's horrible. Horrible. It's horrible for your psychology. Don't let it be you. It doesn't have to be you. S&P 500 weekly chart down a little over 30 percentage point. Not a horrible chart. Doji star formation. Volume is not crazy. But the price action today, my God, was bad. It was very, very bad. And it was down on volume. Buckle up, folks. Excuse me. The small caps, weekly chart. If there's one space that worries me a lot, it's the small caps. The small caps are at critical support, and they've already broken out and failed. So there's a lot of resentment up here of people who bought this breakout. I actually got stopped out of a short on the IWM. It was my worst trade of 2021, was the short of the IWM. But we made it up on the back half of the year by selling premium. And we're at the precipice right now where if this breaks, I mean, the small caps are in big, big trouble if we break to new yearly lows. So be careful. I think it may happen here. Your Stokes are rolling over. Volume is heavy. And this is a weekly chart. Daily chart. Horrible day today. Volume about average, not horrible volume. Stokes are declining. There's more damage to be done here. The other area that worries me is the triple Q names. You know, they're just starting to go down. Whereas your ARC fund names, those have been going down since February of 2021. So while you have the ARC fund down over 50%, the Qs, they're only down 5% on the month so far. But the problem is that with one trading day left to go, right? A lot can happen. Maybe we'll rally tomorrow for all I know. But at current, we have broken weekly support. 378.42 is critical support for your mega caps. Where do we close? 377.66. We're right there. We're just shy of support. And Stokes are horrible, rolling over with lower highs. Big volume already. So these names are in big trouble. Here's your daily chart. Last night on Market Wrap, I was talking to members about the number of filled candlesticks that were out there on Thursday night. And I said, buckle up. This is not a harbinger of good news. It's a harbinger of bad news. And sure enough, we got the break today on the trip Qs. We did hold the support level, but I think we roll over even further from here. Big volume to the downside. The banks. They're up on the week, but I'm worried about the banks. because they did not have a great day today. Daily chart. Bearish reversal bar on the day. So I like the banks. We are long of the banks. I wouldn't go buying them here. Wait till yields begin to hook back up. They're a beneficiary of rising yields. So while the banks are up on the week, remember, yields are down, and now the banks are well off the highs of the week. So wait for yields to pick back up again, which they will. Then the banks can be bought. But you're going to get a pullback here. And that's okay. Understanding the whys behind that pullback, that's how you make money longer term. Technology, weekly chart, very similar to the trip cues. Not in a good spot. They're broken support on a weekly time frame. Indicators lower highs, now lower lows, not looking good. Daily chart. Horrible day. We broke support. Semis up on the week. They're like the last man standing right now. Big volume, but they're trading off the highs of the week. Daily chart. Very bearish day. Even names like NVIDIA couldn't stand up to the selling. NVIDIA is going to head lower. We have a strangle on this trade. Those options expire on February the 11th. LABU. I know somebody asked about LABU. LABU, I want to see down in the teens. I want to see a flirtation with the teens. Does it take out the lows of 2020? I highly doubt it. Stokes, and this is what you really want to look as a setup for, is a W formation weekly chart. You had it here, you had it here, you had it here, you had it here, you had it here. So watch for a W formation. I think it's very close to a bottom LABU, but I think there's more downside to go. I happen to like the weekly Stokes. This is a W formation forming. Look at this capitulation selling. So I like to see one last push down on LABU, then a bullish key reversal bar. That's your signal to look to go buying up the LABU. Now, I forget who it was asked me about S&P 500. Oh, biotech. Ugh. They're going to look the same, the charts. I'll use the XBI. It's the closest thing that I have right now. And you can see, same exact W formation. These charts they're going to line up exactly. I mean, if the S&P 500 biotech fund is the ETF that LABU tracks, well, remember, they mark to market every single day. They reprice every single day. That's why you get the time decay. So the charts are going to look pretty much the same. And it's probably going lower. Let's do some chart requests. We're running out of time. All right, folks, this is going to be brought to you by our friends over at TrendSpider. Take advantage, 35% discount code below. Automated technical analysis at its finest. And let's see who's requested what. LABU we did. UVXY we did. LABU we did. TSM, yeah. M. McNeil. So TSM, I wanted to trade earnings. I couldn't do it. The reason being is that they just weren't paying on the premiums. So we can take a look at the chart. When you take on a lot of risk to trade earnings, you got to get paid. Bob, when you talk TSM, put QCOM and TSM, grab Apple chips and QCOM. All right, we'll bring up QCOM. All right. Oh, hold on. We'll come back to the other one. Bob, is that a couple handle form? Yes, it is. Yes. Do patterns matter to you? Yes, very much so. So what Eric's referring to is this pattern right here. Excuse me, folks. So what he's referring to is this cup, this downward sloping handle, and we are now breaking out above the upper band of resistance. So this is a bull flag setup. That's a continuation pattern for gold, and it's extremely bullish. This is one of the most bullish charts out there, but many people they're not paying attention. They're not going to pay attention for a while. When you start hearing that gold is at all-time highs, which could be next week, then people start paying attention. Right now, I'm one of the very few talking about this. Very, very, very few. If you like gold, don't wait too long. It's not going to be here very long. And once the street begins to wake up to it, forget it. It's gonna skyrocket. So don't wait too long for gold if you like it. Tom, I hold NEM. I love Newmont, great company, and plan to take profits for LABU. You're going to take profits on NEM, so you must have, because NEM. Yeah, NEM has been consolidating for several months now. I love this W formation. I don't know. I mean, you're gonna sell all of NEM for LABU. I mean, LABU is going to be a bounce, so you got to wait for the setup to occur on LABU. Your setup with NEM is already here; it's forming. So, one's an investment right now, the other's a trade. I think that NEM is an investment in progress. LABU, you're just simply right now trying to find a bottom, and it's more speculative in nature and a short-term trade. So, I don't know if I would let go of all that NEM, but your call. Honestly, I think NEO is going lower. Any Chinese stocks I would avoid. Link, do yourself a favor and DCA for long haul. You shorted TSM this morning. Okay. I wasn't tracking it most of the day. Let's bring it up. Nice weekly breakout. One trading day left to go. Loving the Stokes. I think the play here is it's probably going to pull back and retest this breakout point. I would have made money on this trade too, but it wasn't enough. They weren't paying enough. Look for a breakthrough. That's TSM. I think it's going to pull back, fill the gap, and probably head higher. But what does make me nervous is the semiconductor sector, which we went over already. It's in a lot of trouble. So just be careful with TSM. CHPT, Charge Point Holdings. Got to avoid it. It's broken weekly support. We're at the lows of the week. It's probably going lower. Your Stokes are becoming oversold, but that's no reason to go buying the shares. Price and volume action are primary. Your indicators are secondary. This is probably going lower. I don't know if we have historical. We didn't. Oh, we do have historical support. I think you got to watch out for $13 a share. That's where it's going. Daily chart. Yeah, look at here your automated trend lines, folks. If you're new to trading, you don't know how to set up your automated trend lines, here, TrendSpider. Click of a button. There you go. And we broke a bunch of them. 35% discount code. Cheapest price on the web. What else do we have? Plug Power. You know, let me take a look at RSI here before we leave this. Yeah, you're going lower. You know, it's got RSI in the 20s, but it could still go a lot lower, especially with these speculative stocks. You could easily see single digits on your RSI. Plug. Weekly view. $23.70 is critical support. We closed at $25.90. Oh, this is a tough one. Volume is running light on the weekly time frame. That's bullish. Daily chart. You have one support level here, and again with the automated trend lines. I'm going to take them off, and there you have multiple support levels below. I would be interested down here if they overshoot to the downside. But if they break and close below, I don't want too much sensitivity. There we go. That's good. Then we would want to avoid Plug Power because it's going to go a lot lower. All right, that's Plug Power. Qualcomm. We're gonna leave it off of Qualcomm. And folks, if you're just joining in, if I could ask you to smash that like button, I would appreciate it so much. Qualcomm. Ooh, bad day for Qualcomm. Great company. It's up on the week, but it's struggling. Again, automated trend lines sending you a signal, right? If you don't know why it's doing what it's doing up here, click the button, and there you go. That's the algorithm picking off. You got resistance above, and Qualcomm's in trouble. 480 Shenak. Holy cow. Thank you for the super chat. Thank you very much. Appreciate that. 480 Shenanigans. You the man. Super chat. I'm in a loud bar and I can't hear. Sometimes Key West. You're in Key West. Good for you. Good for you. Enjoying profits from AA and Wood. Good for you. Let's go 22. Thank you, Bob. Awesome. You just made my day. Thank you very much. Appreciate that. 480 Shenanigans. Enjoy Key West. Send me a photo. If you're on Instagram, post your Instagram link. I sold QCOM 45. Congratulations on the trade, pal. All right. Qualcomm up on the week, but the daily chart, it's in trouble. So just be careful here with Qualcomm. If it breaks 176, Qualcomm's in a lot of trouble. Jeff, Alcoholics Anonymous or Franklin. You're welcome, Franklin. Hey, folks. Thanks for being here. 480 Shenanigans. Awesome. Thank you. You're very generous, very kind. Uh, I've my pleasure being here. And in closing, I'm going to repeat it again. Trade the market that you have, not the one that you want. I know everybody wants to trade the Neos of the world and the Teslas of the world. Those names are in trouble. They're in a lot of trouble. Don't. As a matter of fact, we shorted Tesla this week, and we're gonna make money on it. So please don't go catching a falling knife. Opportunities are appearing already. Netflix, soon to be a buy. The ARK funds, soon to be a buy. LABU, soon to be a buy. Gold is a buy. You need to be looking at it right here, right now, before the horse leaves the stable. So this is a market that a lot of money can get made in. You got to stay liquid. Tom Lou. Oh, thank you for the super chat. Great. Thank you very much for the super chat, Tom. William, take care. Folks, have a great night. Thank you for being here and have a wonderful, wonderful weekend. If I don't chat with you, be well.